Yes, so good evening, everyone, and you are welcome to the Get Finance and Investment Tips webinar series. Today's webinar will be focused on building a balanced portfolio across asset classes. I promise us that would enjoy it and would also ensure that we have enough time for questions. Thank you for joining, and uh, I believe that this is really going to be a wonderful time. My name is Ayodeji, and an investment professional. So I'll be walking us through building a balanced portfolio across asset classes. I would want us to, we can drop our questions in the chat box, as well as would also give opportunity for those that may want to ask questions directly. Would also give the opportunity to ask your question directly. Please, to ensure that we enjoy this webinar, would employ that we mute our mics so that we don't distract the class. Thank you, and let's begin. So the outline is we're going to look at what is a balanced portfolio and why do you need to have a balanced portfolio. There's also this part on know thyself, understanding yourself. We would also look at the golden rules of a balanced portfolio. How do you set investment goals? And then look at asset allocation. Then we look at a few case studies to wrap up this class. So I expect that at the end of this presentation, we should have proper understanding on how we can develop a balanced portfolio. What are the risks? Also understanding the risk management strategies that you need to also put in place. How do you navigate the Nigerian investment terrain across the different classes, optimizing your return across market cycle, then the practical application of the diversification of building a balanced portfolio. Yeah, so starting first of all, moving into a portfolio, a balanced portfolio, what do we first understand as a portfolio? A portfolio is a basket of investments. So when we talk about building a portfolio, it means that you are building a portfolio across different asset classes. But what our focus as we progress in this class is to see how do we balance it, how do we align it with our investment objective, which are also very, very key, to having a very stable return, because you don't want to build a portfolio that is volatile. You don't want to build a portfolio that at the end, when you think that you're about to retire, that is when the portfolio is dwindling or is very volatile. So that's one of the major focus. So you need to understand that when we talk about investments here, for investment, you need to have them across different asset classes. And you need to understand these asset classes that you are putting your money in. Here, we may not have this webinar because of our time. We may not have the time to go into in detail specific asset classes. But if you can also look at my YouTube channel. For most of these asset classes, stocks, mutual funds, savings bond, treasury bills, commercial paper, I've spoken to them once or twice on the YouTube channel. If you don't have it, you can request for it and I'll repost it so that you understand the different asset classes. And what we will now be doing here is to ensure that, sorry, I'm trying to admit, is to ensure that you are able to select and diversify across asset classes. You know, one of our major goals, one of the major objectives of setting up this community is for us to build wealth. transgenerational wealth. We are not uh, speculators. We are not, we don't speculate on the market. We want to build sustainable wealth such that whether when you retire, you are building wealth focused on to match up with your lifestyle and you are having steady. That is the very objective of building or of developing or setting up this community. So first of all, what is, so when we go to what our major focus is, what is a balanced portfolio? A balanced portfolio is strategically allocating funds across multiple asset class to optimize return while minimizing risk. You know, there's one principle about investment. The principle of risk and return. So as you try to increase your return, there's also that potential that you are also increasing your risk. They go line in line. We say they are positively correlated, so they move in the same direction. But how do you get to a level where you are able to optimize across different asset classes? So some of the asset classes, especially for most people on this call, yes, we have diasporas, Nigerians in diaspora, even on the group. We'll look at how can you balance your portfolio across equities. So you will see for sometimes when you look at the recommendation, I put allocations. Reason why it is best for that I use allocation is we all have different capacity. If it's 1,000 naira that you are able to start to invest, you can allocate. If it's 10,000, if it's 100,000, if it's 1 million, if it's 10 million, if it's 100 million. That is why proportion matters. It is that same proportion that you apply with a bit of variability that you apply in the investment. So have the stock equities, which we all know as stocks. We have fixed income. There are different asset classes around fixed income that you will need to balance based on your investment objective. There's real estate. There are different ways you can put funds in real estate. You may not buy the property directly. Commodities, how do you also set it account? Most people are moving funds to gold now, given the volatility in the US. How do you balance that and have it as a proportion of your portfolio? Alternative assets. For cryptocurrency, I'll put a caveat. This is for high risk individual, but given all my engagements, a lot of the very younger ones are really keen on cryptocurrency. We'll see what you want to do, the percentage you may want to allocate around that for venture capital, high risk, high reward, foreign investments. So that is also important. So at the end of the day, you would have different percentages. So I've used simulation as we progress on what are the different asset classes that you can put your funds in and have them allocated across these different asset classes. And why is this very important? Sorry, let me admit. Why do you need to build a balanced portfolio? Firstly, we know that the market can be very volatile. Investments in stocks can be volatile, hence there's diversification. For fixed income, from the word fixed, you already know what you are getting, so it's not volatile. But as you begin to expose yourself, even when you are investing in other currency, there's also the volatility that may come with it. International stocks, US stocks, it has its own volatility. Hence, you don't go all out. You have 10 million and you're putting all the money in stocks. You are putting all the money in fixed income. You are putting all the money in US stocks. Or when you are investing in US stocks, you are just buying one stock. How do you balance that? You need to recognize that there is market volatility. For some of us that maybe started investing in the market 2 years ago, you might not have experienced what we are seeing this year. The volatility we are seeing, you might just have been enjoying just the upsides, but now you are seeing that volatility. How do you balance your portfolio? Currency risk. The currency, yes, depreciates more than it appreciates in Nigeria, but we've also seen situations where the currency have also appreciated. How do you balance your portfolio? Another factor to look out for is inflation. How do you, for you see most people, which investment questions that we get, which investments can give you a return that is higher than inflation rate? Which investments can bridge that gap? These are some of the things why people try to look out for building a balanced portfolio. So once you have that understanding why it is necessary for it to be balanced, then we'll go into understanding yourself. This is really very important. I said know thyself. For those that did let's say logic, they will call it that Socrates. Say know thyself. Understand what type of investor are you. This is very important because the portfolio that you'll be building would have different variants. For some people, based on the age, it is not someone that is 30 years. It is not the same type of portfolio you would have as someone that is already 50, 55, or someone that is already 40, or someone that is just over 20. Your age would have an implication on the portfolio that you will set up. Your income stability, is it monthly that you get in your income? Are you into business that it comes in quarterly? What is also your investment objective? You need to define all that. That's why sometimes we say in investment management, proposing portfolio can be bespoke, customized, because client A may have different objective for client B. Client A may be at different age level. I've approached people on the platform. They have reached out, some about to retire, person this morning I'll be getting. There's someone I also had a meeting with that, okay, they're about to downsize and pay us off at work. How do I stabilize? How do I use whatever I'm going to be paid? How do I set it up? How do I balance that? So this sometimes it can be, it may have to be customized. But what we'll be talking today, you will still be able to pick one or two things on how you are able to meet your own investment objective. The time horizon. When we say time horizon, meaning how long do you have for the investment that you're trying to build? You know, some people are targeting their kids would be going to school, and they want to begin to save, whether school abroad, school in Nigeria. Some are saving towards a project, house project. Some may be saving towards retirement. All these objectives would also determine the type of investment that you put your funds you put your funds in. The first kind of so generally so generally there are three types of investors. Please, this part is really very key, because when we sometimes on the platform, we know we discuss more on stocks, while we also discuss other asset classes. Stocks is not for everybody. You need to understand yourself. So I've met investors or engaged investors they are very conservative. They don't like volatility. They will not have peace of mind. So as we're talking about conservative, the rest of mind, when with the current situation, some people have even been discouraged. They've lost hope that is this how the market is. I've lost money. You need to understand what type of investor. For conservative investor, they want stable income. Yes, even if you will not give me much return, I don't want anything to happen to my principal. They have predictable return. That means a lot of fixed income investments. Moderate investor would try to balance between growth and security. Yes, I like the return, and I also don't want to take much risk. So it means that you would balance. You will not go all out to some investments that are more volatile. When you also look at aggressive investors, these ones are willing to take risk. Last week, uh, no, I would say yes. Last week, I tried to drop something on livestock. I say it's not for everyone, because if it goes wrong, I'm always very careful not to discourage those that are new. If you are just learning, it is, we say you are testing water. So start with investment. You have never done stocks. You start with stocks that have strong fundamentals. Over time, you begin to build your investment. So you would see that for some of the stocks, those that have invested in MTN, those that have invested in Aradel, in Dangote Cement, amongst other stock, with the market that has been going down, your your portfolio might have remained on the same level. Some are wondering why has it not grown. But in a down market, if your portfolio is stable, you have these stocks there and the valuation is stable overall, it means that you are doing very well given the situation that is happening in the market. This is very important that you understand. You need to be able to classify yourself. Where do you belong? That's really very key. Um, Let me admit, yeah, that is really very key. So for some classification, which is still a bit of, you have very conservative, you have conservative, balanced, you have growth, aggressive. What we're just saying, or what I'm trying to make you understand here, is understand yourself. Two friends can have different, can belong to different categories. It is based on their exposure, their experience, that will determine where they want to belong. And some people can start from very conservative and move to balanced. Some people can start from very aggressive and now move to, they can start from very aggressive and move to balanced, depending on the individual. So that is really very key, that's for us to understand. Please, you can be, so that you don't forget, you can also drop your questions in the chat box even as we progress. So what are now some of the golden rules for portfolio building? It's always long term. You know, for some of you will be tired with some statement I continue to use. This is a platform we're trying to build people to understand. So there are some things that will continue to emphasize. Some of you may be a bit experienced and may be on that platform, but people reach out individually, I engage them, and you know that there are a lot of people that are really new to investment. First of all, you need to consider your objective. Savings are for short term and investment is for long term. Our goal is long term. And that is why access that have come down from 28 is currently 23. We are not bothered. If last month, based on our monthly allocation, we bought at 26, and this month, end of the month, I will start disturbing us that to ensure that you allocate something on a monthly basis. Start reminding us this is salary week for those that are salary earners, and for the business people, I'm sure that you also try to pay yourself at a certain level. So you set something aside. Don't put everything back, even if it's 2%, 3%, you need to be taking something out for long-term investment. So once you start, if it comes down to 22 by market tomorrow, I think around 22, 21, we'll buy more. We are not bothered, because this same stock can be 40 naira in the next 3 years, can be 50 naira in the next 5 years. So that is our goal. We continue to say dollar cost averaging, continue to buy at the level when we see it. And when it comes down significantly, it's even an opportunity. If I'm allocating 10% to 10,000 naira in quotes to stocks before, and I see that the stock market has crashed significantly and the business model of those companies have not changed, I may increase my allocation to 15%. This just for example, we'll look at the allocation even as we progress. I may increase my allocation as we progress. So that is really very, very important. You need to accept that the value of your investment will rise and fall. Knowing this, I started with know thyself. As Socrates would say, know thyself. So you need to understand that if all your investments are not fixed income, then there will be a period when it will go up, go down. But in the long term, it should go up more than going down. This is not a stock like you go on Yahoo Finance, Google Finance, look at some of those stock 20 years charts, 30 years charts, check them. They come down, but they still pass their previous high when they begin to go up. The US market now is very volatile given the trade war going on. But there will be a time that they will also recognize that this cannot persist for long. And once they cut rates down, the implication is that cost of borrowing in the US will go down and businesses will be able to make more money, which means that stocks will go up. That is for stocks, for those that are doing stocks. So the opportunity is still clear. We are not bothered, we are focused, and we are not playing short. If NVIDIA comes to 80 naira today, $80 per share, you buy more because whatever happens, there's still opportunity based on the statistics. There's still opportunity for that particular stock, which is it's critical. Also, remember risk and return are closely linked. Sometimes I used to get questions around, I like this, I want can you give me an investment that will give me very high return, but I don't want to take risk. They are mutually inclusive. You cannot separate one. So as you try to increase, when you look at it, as you try to increase your return, you would also need to know that you are taking more risk. So when you are investing in treasury bills, the rates will be lower than investment in commercial paper because treasury bills is issued by the government. They can print money. Commercial papers are issued by corporates. They can't print money. They can go bankrupt and you can lose your money. So, but we're saying that then you now need to know that it is not all commercial papers in your money in. So you need to understand that. Ensure that your investment reflect your goals and attitude to risk. I've spoken about that. Is important when you are restructuring your portfolio. Lastly, please, even if we are saying buy every month, you need to develop a model where you're able to capture your returns and review every 6 months. How are you doing? Are you making progress? What is the performance of your portfolio? You need to look at it. For those that can use spreadsheets, if I'm chanced, I don't want to make the commitment. I don't like to promise and I disappoint. I may develop a template where if it's a spreadsheet that we can put our different investments and you can see your portfolio as a goal. I'm not making that commitment, but once I'm able to, I'm chanced to do that, I will also share with us that you're able to track all your investments. Yes, like the Optimus app, you have 3 or 4 types of investments on it, right? So you're able to see whether you are gaining or not. Yes, you have the savings, you have mutual fund, you have US stocks. How can you build a template that you know that you are putting 5 million? What's the total investment or value of your investment? So there's a need for those that can work on that and build that model. There's a need for you to be able to track and review your performance. You invest in mutual fund, you need to know whether you are making money or not. These are because you are investing for the future. It is not in the next 10 years that you now just call that your investment advisor that's see this money that I've been putting with you. How is it doing? You need to be able to you need to be able to understand and follow the performance. So setting investment goals. So before you construct a portfolio, like I rightly said, you need to define the objective. Is it for wealth preservation? Is it for capital appreciation? Is it for passive income? Or is it inflation protected? Some, it can be a mixture of one or two that you are trying to. But it's important that you know what objective, what your focus is. It's very key that you need to understand that. And that's why, let's say, even in Nigerian markets, is it for dividends? So if it's dividend paying stocks that you expect they pay dividend once or twice in a year, you invest in them. In the US market, there are some that pays dividend they pay dividend every quarter. It is important that you also note those stocks and you buy them. And if it's just wealth preservation, you need to determine and be clear with that. Hello, are we following? We can use the sign thumbs up if you think we are following, just to be sure that we are here. Okay. Thank you. Yeah,
oh, no,
so
you see something wrong with you. Who remove this thing? Who remove the plug of this thing?
Yeah. Okay. So now the diversification strategy. Diversification strategy. Diversification is very key. When we talk about diversification, if you are investing in stocks, you need to invest across different industry. So when I'm proposing, you see some of the portfolio. Are you in the oil and gas? Are you in the banking? Are you in telecoms? Are you in the agri space? You don't just put the funds. Yes, I can see hands go. I'll call us once once we are done. My plan is to use at least just 1 hour, 1 hour, 10 minutes on this. Then we can take questions. So, and please, there's no basic question, no wrong question. The essence, the reason why I'm putting everything in and doing this is to build people up, for us to build our portfolio, build our investments. It takes a lot, but the fulfillment that I get from this is that next 1 year, if you have not been doing it, you can look at your portfolio and you are smiling. That's more than sufficient. Yeah, so please ask your questions. Sometimes I see questions on the platform. I may be very busy. You see, sometimes a day I may not even be able to drop any chats. But I also believe, thanks to all those that also try to help out and respond. That is why we are a community. But please, this is also an avenue to ask your questions. So please prepare your questions, and by God's grace, we'll be able to respond to all. You look at it, different asset classes, they work with different rates. So you see that beginning of last year, even treasury bills was as low as 4%. At that time, you don't even have business. I would say you don't have business investing in treasury bills. It means you may invest more, maybe look for commercial paper or look for high yield savings platform where you put your money. And when you begin to see the interest rate has gone up, in the last, I think about 4 weeks or 5 weeks ago, there was a podcast, the Monday podcast that I do for the church, that I said people should lock in on interest rate. The yield on treasury bills then was around 24, 25%. I think it was as high as 27%. That this is the time for you to buy bills and lock it in. That's treasury bills, investing in treasury bills. This is the time for you to lock it in and invest in treasury bills. And not long after that, the last 2 auctions, rates dropped significantly. Sorry, trying to add people. So rates drop rate drops drops significantly. So it is very important that sometimes you even also follow, you try to follow the news. Sorry, just a minute, trying to add some people. Yes, so that you also try to also follow, you also try to follow the news. It's really very key. So if you have locked in your investment on treasury bills at 25%, at 29, have some bills at 29% when it was high. So interest rate fell to almost 21, 22% yield. You know, I was trying to, some people are asking, how do you calculate yield? How do you, if you still have need clarity around that, we can discuss it during the Q&A. You lock in your investment. FGN savings bond was as high as 17, 18%. It has dropped to about 16%. If you have locked in for 3 years at 18%, at 19%, whatever happens to interest rates, same bills, there was a year that the bills were going for, the bonds, FGN savings bond was going for 5 or 6%. That period, I will not advise you to be investing, because you cannot go and lock, you can't lock your investment at 6% for 3 years and interest rate moves back to 20%. You are losing money. So these are some of the advice that we'll be giving. It's an independent platform, because we also speak, where I work in a regulated environment, we speak on TV. There are some things I will not be able to say openly, but the community, nobody can hold me. I can tell you not to buy something, I can tell you not to invest in a particular CP. It's a community that is a free based community. So that does not conflict with whatever I'm doing. So you'll be getting that advice based on the experience that I've acquired in the industry over time. Geographical location is also very important, and the investment vehicle. So now we're getting close to why we are here. So when you know, I said that you should determine what type of investor are you. So if you're a conservative investor, what you want to look at, you know, this is checking, looking at different variables, also looking at standard across, but it is not cast in stone. If you're a conservative investor and you don't even want this part, sorry, reason why I'm not putting it in PowerPoint mode is so that I can be able to use the I can be able to write on the presentation. So you can take out, if you don't want, you can take out the equities part. You don't want equities, you can always say, okay, just fixed income, then we'll look at it. The real estate, when we talk about real estate, you know, there's REITs. Some people we've spoken about, you ought to buy REITs. If those that have the capacity, is it off plan, is it land, different options. You can also look at that. They also appreciate if you work with the right person, if you do it the right way. It carries its risk, but sometimes you can even get up to 100% depending on location where you're investing the money. So that's really very, very important. Secondly, if you are moderate, it means you are putting more in equities. So some moderates, you may want to say, Ayo has said 35%, but I think I'm comfortable with 20%. Here, I don't even want to do, I want 0% equities. Here, I'm comfortable with this. The alternatives, like we mentioned, alternatives is you're investing in dollars, investment in dollars, which has to do with maybe dollar mutual investment, dollar fixed income. You are putting your money in US stocks. That's alternative because they are not in Naira. You can look at that. Or some people, you can view your equities and divide the equities and say, I'll do 20% Nigerian stocks and I'll do 15% US stocks. And if you are very aggressive, it means a lot. It means a lot in in it means you need to you have a lot in equities. But what are also your age? So you cannot be approaching 50 and you say you are aggressive. You are taking a lot of risk. I will not. So your age also matters. If you are just starting, maybe you are 25, 30, you are just starting investment, you can classify yourself as aggressive. You can take a bit of risk because you have longer time. So you are buying shares at $20. If you look at most of those US stocks, they've done stock splits. So even if you see them trading at see Nvidia, for those that may not be into Nvidia, I think even last year or less than 2 years ago was buying like at $600. It got to $1,200. They did a stock split of 10 for 1, and it came down, it started trading at $120. So you would see, if you see it at 120, those that are bought it, assuming you have 1 unit, then you will have 10 units now, but trading uh, at um, at at $120. So they continue to grow over time. I know our next class will be on the US stock and based on the votes pattern, but there's a need. You cannot be you can't be approaching retirement and you want to say aggressive. So you see people based on the age. So people would move. So maybe they start at the age of 30 when they start investing. They have 30 years. You have a lot of, you are very aggressive. And over time, you will need to reduce your stocks. It's like my parents, like when yes, they still have a stock, maybe it's about 10% of their portfolio. The time they're approaching, when they were over 60 plus, they're over 70 now. I said, okay, sell some of your stocks. There's this attachment to First Bank and all those things that they get their dividend. They've been getting it for years. So as you're already approaching, you're over 70, you cannot be keeping too much stocks like you were doing before. So all those things will continue to change. And for some of us that are here, I want to plead with us. There's no wrong question. There's no basic question. I want to encourage people, ask questions even on the group as much as when it comes. And for some, maybe it's personal. It may take me time if you reach out to me personally at times to respond, but I try to respond to everyone. If you have some things to discuss personally around your investment and you don't want to bring it to the community, like I said, our objective here is we want to build people that can build wealth, that will look back that I've not been doing this before, but now I'm proud of myself that I am now building something that I can hand over, that I can use to achieve different objective project, retirement, and the likes. So that's it on the asset allocation. Sorry, I don't know if someone can help to just drop on the group that the session is going on. I don't want to pause, so that for some people they might have missed, maybe they've forgotten, so that may remind them. Yeah, so asset allocation strategies. So conservative portfolio, like I said, wealth preservation focus, low risk tolerance. Put 70%, 20%, 10% in equities. We'll look at it. Moderate, 45%, 35% in equities, in real estate alternatives. If you are aggressive, you're less in fixed income. High growth, high risk tolerance. So that's the different objective that we can look at. So I now thought that so that we're also having some takeaways from this. I said, let me look at based on the different. I see people, I have 1 million. How should I allocate? So you would see that we said if you are aggressive, if you are determined, first of all, that you are aggressive. So let's assume that out of your portfolio, so you have sorry, let me insert a clean, I think it's angry. Let me insert a clean slide I can use for us. Okay. So you have, so I think this even answer, you have 1 million naira, for instance. And I said, let's say you are conservative. So it means that out of the, if I say you are conservative, what have we used based on this allocation? It's not cast in stone. Some people, you can say that, no, I don't agree with you. What I think I'm comfortable with is 70%. What I'm comfortable with is 80% in fixed income. And this is in fixed income. Let me hold on. Sorry. So I'm saying this is an investment of 1 million. See, don't be carried away with the money. If it's 100,000, you are planning to start with. If it's 10,000, it covers, it is passive. That's why we are using percentage. And if it's 100 million, so it covers everybody. So if I say this fixed income is 70%, I can say out of this fixed income that is 70%, 70% of 1 million is 700,000, right? Out of this 700,000, I can now break it down. Say I want to do treasury bills of 200,000. Commercial paper rate is minimum is 5 million. Except if you are using I Invest, I think their minimum is 10,000, or I Invest owned by party and partners. They're also regulated. They are with 10,000. So CP, maybe for those that have 10 million above, there's a minimum. So that means out of this 700, so you will see that out of the 70%, you are also now allocating. This is treasury bills. I want to do FGN savings bond. FGN savings bond. Savings bond. So I'm putting 100,000. So if I'm unable to do CP, I may even increase it to 500,000. FGN savings bond. So trying to just admit. So this FGN savings bond, high yield savings. Those that are using PiggyVest, high yield savings accounts, PiggyVest, Optimus, depending on which one you are comfortable that you are using. There's the mutual fund, which is also fixed income, mutual funds. So I can allocate mutual fund. Why I'm a bit, I can be biased at times on mutual fund is the return is not guaranteed. So if I see a guaranteed investment because it is fixed income, and I know what I would, I think I'll reduce this. So I see a guaranteed investment like treasury bills, like FGN savings bond, like high yield savings. This, even if this is 200, so this is 200,000. I may want to invest more in that compared to investing. So I may want to invest more in that compared to investing in mutual fund. But mutual fund is also very good. Yes, currently some are giving close to 20%, but it's a target return. Once interest rate starts to come down, your return too will start to come down. The return they make on the investment starts coming down. So this is 100, 200, 300, 600, then you put 100. So you would see, it may look complex to you that I don't have the time to do all this, right? And you can just say, okay, this 700, I'm just dividing it into two. I'm doing treasury bills, high yield. I'm doing mutual fund and treasury bills. You can decide on your own, but you know that what you are, because you're a conservative investor, 80% of your funds, maybe of your what you're able to save on a monthly basis, or you save periodically, You know, for some, when we say this 700, it may be after 6 months you're able to put together 700, and you do your portfolio allocation. You do your portfolio allocation. So this is fixed income. So going back, because we are getting practical with this. So you look at, as I've said, you're a conservative investor. 70% or 80% is this. So when we now come to equities too, equities, because you are conservative, you don't want to invest in stocks that will be going up and down too much and will be giving you sleepless nights. So if what you are investing, even in equities, you know, we said is a percentage. So this is a weighting. If 20% of 1 million is what you are trying to invest here, if it's 10% of 1 million, it means what you have to allocate. Thank God that the minimum is almost zero. So with less than with 1,000 naira or 100 naira, you can start investing in stocks. And it's just that you can't buy fractional shares, so you can buy 1 unit, 2 units of anything. So it accommodates everybody. So if it's 10% of 10,000 naira, you want to put 1,000 naira in the market. Yes, you may not be able to spread it on everything, but you can select 2 or 3. Equity mutual funds, these are managed by portfolio managers, right? And they also deliver return because the portfolio managers manage it, and it's they, you know, they can invest in close to 20-30 stocks. So it's always balanced. It doesn't fluctuate like you have invested in a particular stock. NSC, there's the Betiva, Stanbic, they have what we call ETF that invest in the top 30 stocks. That too will not be very volatile. It is what happens to the top 30 stocks that impacts on it. So if you don't want a portfolio that will be fluctuating significantly or very volatile, you can look at that. All these stocks, these are long-term stocks that I don't need to tell you much on how they will make money. They have passed the test of time. So whatever you think you are allocating, depending on where you fall in, are you a conservative investor? Are you a moderate investor? Are you an aggressive investor? You need to determine that. And your age, if you are getting to retirement, these are the stocks that will be in your portfolio. This is not exhaustible, but I've just used examples for those that are really very new. What some of the questions you want to ask me is, hey, I'm not here to come and just speak English. What can I do? What stock can I invest in? So giving you, these are recommendations, suggested stocks that you can start with. Like you rightly know, stocks are volatile, but in the long run, you get return. Dangote Cement is paying 30 naira per share for the stock at that level. So you see Zenith is going to declare before end of this week or April, they'll declare their results. Maybe they are paying 4 naira. You get their dividend. MTN from next year, I know that they may start paying dividend again. Aradel have been consistent with dividend. So these are stocks that you want to look at. For those that are moderate, it means that you will have some stocks that may be moderately volatile. And that's why I've also done this, that you look at the what you are investing in them. Then you are very young, but if you are new, if you are very new, I want you to start from a conservative level. You are very new to the market. You have not bought stocks before. You are just starting. Start here, and over time, you can migrate if you are young to this level. Don't just start. You are new to the market, because sometimes I feel pain when some people, they may not read in detail some of what I post, and you just go and put, you just hear, or tantalizer will go up. You have not read some of the things we have been discussing before, and you are just starting, just go and put all your money into tantalizer. You go and buy it at almost 3 naira 50 kobo or 4 naira, and the thing crashed. So that's when you now begin to lament. That's why I said I don't want to do this stock thing. I've just put my money, I've lost my money. But if we If we invest intelligently, we invest based on fundamentals, it is almost likely. Yes, during COVID, market crash, Zenith Bank, I recall that January was trading at 22 for one of my clients that we bought, and it came down to 975 naira. Some people at 12 naira, they were already panicking, they sold. Some people sold at 10 naira. That year, that stock went to 33 naira. I know one of my uncle that put in money that year. So imagine you have Zenith at 9 naira this, and they are paying you dividend of close to 5 naira every year. You are getting almost 50% every year on your investment. So for those that understand the market, when you see those ridiculous price, that is the time to lock in. Some people will never sell this Zenith that they bought at 10 naira, and you are getting almost 50% return on your money every year. They will never sell their GTB because they got it at a giveaway price. If I will tell, so that's why you may be losing. Don't do one off. If you are the type that you think, oh, I'll just buy Zenith at this current level of 46 naira or 45 naira, and I'm not putting money again. No, we are building wealth. It's over time. There will be opportunities in the market that market will crash so much that you may change your portfolio mix. So that period, so I recall when I was I was trying to buy let me just insert new one. I was trying to buy, I know I'm looking at our time, but this just pardon, I saw Nestle then for my kids. I saw it at 756. There's a certain amount that I, in the over 10 years plus, that I always try to put in their account, and I buy shares every month. So I saw some of those stocks at ridiculous prices. Down the cement there, maybe it was at 140 or something. I quadruple what I normally put for that month to buy more of those shares. I bought Fidelity at less than 3 naira for this, most for them, and it's currently almost 21 naira. So you see, those opportunities will come. UCAP was less than 5 naira that I bought it. It's traded, they're giving them bonus and the likes. So beyond even for yourself, for those that have it, you can, if you want to open accounts with AfroInvest, we can send you the minor form. Open your account and you send something to the account on a monthly basis. If it's for those that if it's other stockbroking firm, you know what we have said is, even if you are not trading with AfroInvest, as long as you're a member of this community, you are entitled to the advice. And so start setting something aside. You can start with as low as 2,000 naira monthly for your kids. You can start with as 5,000 naira monthly. You know, their own is long term. You can call them aggressive. So I wasn't doing savings bond for them. I was doing stocks. The Okomu oil is less than 150 naira. I bought it. Okomu is almost 700 now. So you can start. This is stocks. For some, if you are conservative, you can be doing FGN service bond 5,000 naira every month for them. And maybe you just once in a while you do stocks, but also build a stock account for them. In the US, currently, they don't allow below 18, except you are buying into a fund to have an account. So you may not be able to buy stocks, US stocks for them. But the Nigerian one, you can see the buying needs, set something aside as we are encouraging our own self to build wealth. All the money you think they give away, just look at something you easily give to people. Then say, okay, if I can comfortably give people 1,000, 2,000, 5,000, I should be comfortable to give my kids that amount on a monthly basis. Have that, also have that at the back of our minds. I know that's not our focus, but it's also important. It's part of why we are part of this community. So now we move to the US stocks. I just also built the portfolio that if it's 20%, you are doing whether it's 30% of whatever you want to allocate, and maybe it's 50%, you allocate part of that and you select that particular the portfolio. Why I'm big on this? This covers the top 500 companies. So indirectly, I love what someone dropped on the platform and say if you invest every is it every $10 or every $100 you invest in Vanguard 500, you are investing in up the charts. I think I reposted it on the other group. The charts also now showed amount of Nvidia, Apple, Meta stock that you are buying. So this, they don't fluctuate with all the volatility we have seen. They've not gone down by more than 10%, or even it's less. They have almost gone back and it's going back. So, but we've seen Tesla has dropped by those that bought it at very high price. That's why sometimes we put suggested price. If we are trading the US market, please, patience is key. Never think that you have missed an opportunity. The opportunity will always come. The market is a cycle. So don't be too eager that this thing has continued to go up for 2-3 days. Once you have missed that train, even for the Nigerian stocks, just wait. There will always be time for a reversal. And you just put something small and see if you have to do it, just put something very small with the mindset that you would also come and invest. So for those that bought Tesla at over 400, so now that it's almost close to 200, you should even be more confident to buy more, so that if it goes even below, you see it at 150, you just buy. You know that you have a 10-year game. You are not bothered. So that's what you look at. It won't be as volatile. So if you are a moderate investor, you look at that. If you are an aggressive investor, you also look at that. So that's really very important. So if I'm trying to for the fixed income, I've discussed all the different options that you need to look at based on the percentage you are allocating to it. So if you have not been doing it before, investment before, so what the first thing you need to do is set how much do you want to be setting aside on a monthly basis. That is our goal. You will see from this week, every day, I'll be reminding us, ensure you set something aside monthly, what you are investing. Is it 5,000 naira you want to put in stocks? Do it. FGN savings bond will open first or second week of April. Have something you have to put there. Your savings, high yield savings, whether on PiggyVest, whether on CarryWise, whether on, have something you have moved there. So you look away from that funds. Before you know it, when December comes, when maybe we would be able to have, when people come and share how much of how they have gained or how they have built their investments on the platform, you'll be able to have very positive testimonies. And because that's what will keep us going. That's that fulfillment that will keep us going. So we'll take that at the end of the year. So as I'm wrapping up on the case studies, so for a conservative investor, I told you that age actually matters. You become conservative when you are getting to maturity, retirement age. So there will be a mixture in what you are putting your funds in. Some people, I put real estate here. Some, you may not have the capacity. That doesn't matter. You can strike it off, and your 10%, you add it to the 80% here. If it's fixed income and equities alone you want to do. So you just look at that. If it's that's for your conservative and you're already approaching retirement, you don't want to bet with your money. There was someone on the platform that reached out, approaching out to retirement, and was going to get a large sum of money. Like some of the advice that we looked at, that say you are getting this money, when if you put it in treasury bills, you get upfront interest. Let's assume the person has 50 million, and at 20%, you are getting 10 million as upfront interest. That 10 million, we can take risk with it. Out of the 10 million, maybe you put 2 million now in equities markets. You know that your 50 million is guaranteed. So you see that, or you know that your 50 million naira is guaranteed. The 10 million that you're getting, you put 2 million in stocks that are paying you dividend. You said, oh, you have one business idea. You can, okay, go and try the business. If you have not been doing it before, go and try your business with another 2-3 million. Start that business. If it doesn't work out, you know that your seed capital is secured. These are different ideas that can come depending on your objective, investment objective. So if you are a moderate investor, your age of 40, you have 10 to 15 to 20 years, still invest. Yeah, your mix would also be different. So we're looking at equities. You would see that most of the, going back to when I allocated for stocks, you see there's telecom sector, there's oil and gas, there's cement sector, there's the banking sector, there's the agri sector. So it is well diversified. FMCG is there. So you have to have it diversified across sectors. There are some growth stocks because we are becoming moderate. Livestock is like a growth stock. You know, I added it here. Livestock is like, if we are looking at US stock, Sean, SOUN, SMCI, they are like growth stocks. They are just coming out within that space and they present opportunities. And you are very aggressive because you are young, you are just starting, you have the time to wait. You can decide, you can buy Dangote cement at 400 today, it can be 800 in the next 5 years. That's almost 100%, average of 20% apart from your dividend. So you can put your money there. The different fixed income, you are also able to assign your investment. So you see the different forms of the investor. You need to identify yourself. So in summary, the first thing that we need to note is that you need to be able to diversify your portfolio while building a balanced portfolio. You can't say your portfolio is balanced when it is not diversified. It has to be diversified across asset classes, across different sectors, across different geography. It has to be diversified. So, and as I wrap up, I thought to throw in also this chart that if you set for those that are within the mid level or are just starting, using the word compounding, which we also call the snowball effect. If you begin to set, what I've just done here is that if you model 1 million naira, you are adding 1 million naira at the end of every month. Every year, which means if you divide 1 million, for instance, you divide 1 million naira divided by 12, because sometimes when you hear big numbers, just break it down. That is 83,000 naira every month. You had it and you are saving it at an average interest rate of 15%. In 20 years, you would have close to about 120 million. This is compounding. You know, the impact, why this is growing higher is the impact of compounding. So let's say in this year now, 14 million would be times 1.15 to grow it, plus the 1 million that you are adding to it. So you can see there's really no magic here. So next 20 years, if you are consistent about it for 20 years, you would see how your money would have doubled. You know, when you look at rule of the thumb, if you have 10 million at 20%, in 5 years, you double that money. Every 5 years, you double the money. If it's 10 million, it becomes 20 million after 5 years. In another 5 years, it becomes 40 million. In another 5 years, it becomes 80 million. Just at 20%. So you can see why we'll continue to encourage us. You need to begin to set something aside on a monthly basis. If you cannot do 83,000 naira monthly, you should be able to do 8,000 naira monthly. If you cannot do 8,000 naira monthly, you should be able to do 800 naira monthly. Or you should be able to do if you want to do 800,000 monthly, you need to have something aside. And that is what we want most people to focus more on. If you are not setting something aside, it means you are just joking from just being part of this community. That is good. That is not good. Those are not the type of members that we want. This is a platform that will provide the knowledge for free to ensure that you are able to build your portfolio. So I believe that the last 1 hour, 5 minutes have been really engaging. So I'm going to now be looking at the question. Thank you so much for your time, for listening, and I'll be taking questions now. So let me check the chat box. Okay, so I will be starting with so let me just, I think we have just about 3 questions online. Then I will also take questions. I've seen people raising their hands. So I have one question here from Mrs. Choma. How do you know companies that sell commercial papers? So you need to first of all sign up with an investment firm. Thank you so much. You need to first of all sign up with an investment firm, whether with Stanbic, with Afroinvest, whichever investment firm you are comfortable with. Do your own research. If you are comfortable with it, you sign up. They would post, like I know Afro Investor 2.0. If you check it now, you see Access Bank commercial paper. So they post commercial paper. It is not all commercial paper that they post. They also try to look at the risk level before they post it. So if you see any commercial paper someone is presenting to you, please drop on the platform to confirm, do you think I should invest in this? That's the essence, is to guide you with our own little experience in the industry. We'll be able to tell you, I think you should do this. I think you should be careful with this. Given their rating, we'll also be able to advise you for it, because we don't want anybody to lose money as we are trying to build wealth. Um, I invest, I invest, take withholding tax. Is it the same? Yes. Yes, withholding tax is collected on commercial papers. So they charge withholding tax on commercial papers. That is government, it is standard. So when you are going to invest, if the rates that they are giving to you, if the rate is so the best way to look at it just on the surface, if the rate, someone says the yield is 21%, what you just do is 21 times 0.9, because they will take 10%. So if this is 21% times 0.9, it means what you are getting is, apart from charges, so apart from charges, so it will be between 17 to 18% return you'll be getting on your investment. So it just gives you an idea of the yield. Once there's tax on it, just do multiply by 0.9. You get the value. If they say it's 30% by 0.9, you'll be able to get the value of what will likely come to you. Does Optimus ask treasury bills? No, for now, you can purchase treasury bills on Afro Investor 2.0, which is also owned by Afro Invest. So you download it, you open your accounts, and I think between 10 and 2 p.m., they list the available treasury bills on it. If you have the capacity to go for the primary market, you can send an email, which minimum is 50 million. You can also, you get higher rates. You know, that's in the primary market, they buy at bulk, then people come and resell in the secondary market. So let me first, I'll still come back to the questions. So let me take questions. So let me start with uh, let me start with Mr. or Mrs. Eddie. Let me start with that. So please go ahead. Okay. On, yeah, Ogene Ogo. Sorry if I've forgotten your name. Please, you can go ahead. Your hand is up to ask your question. I hope there's no restriction on muting. Well, so if you are, can someone just unmute to ask your question? Let me see.
Um,
Make
Hi,
sure
Doc.
it's working.
Good evening. Thank you very
Yeah,
much.
good evening, ma.
Yeah, thank you very much. Quite an interesting and insightful session. Um, First question would be, which is better? Because I mean, recently a debate ensued, you know, at some place regarding which is better, monthly contributions or yearly contributions. Which one gives a better outcome? I mean, you spoke about
Okay.
contribute monthly. You know, do they amount to the same thing in the final analysis?
Okay. Thank you very much. Very valid question. So two things for monthly contributions. Right, I mean, for monthly, so if you are doing a monthly contribution, let's assume you are putting in um that 1 million that you're supposed to put in for a year. So you are putting in 83,000 naira per month instead of putting. So it's between either you have um yearly, monthly. So because of the power of compounding, so if you have platforms that can help you compound, so like PiggyVest, Carrywise, Optimus by AfroInvest, at the end of every month, so if you put in 83,000 this month, and let's say the interest is 5,000, in the new month, what you would have to calculate will be 83 plus 5. It means what you are starting that new month with is 88,000. So you will definitely have higher interest rates at the end of the day, and your investment will grow faster than having just lump sum annually. Except, for some workplace, um, you maybe they may be giving you maybe they pay some lump sum amounts, and maybe that's what you only target for investment. That is also fine. So it's just when you start there, when you put that money, if it's a monthly compounding you are doing, or you are investing in long-term investment, 1 year treasury bills, or if you get the same rate and you're investing monthly, it will give you higher return on a monthly basis as long as it's being compounded monthly. So that's what you should look at. So I know like Optimus that will have OptiFlex, which is at 13%, but because it's compounded monthly, the true yield, which is the real return, may be close to 14, 15% at the end of the year because of that compounding impact. Um, because of the compounding impact. I hope that's I hope
Yes,
that
yes.
is
Thank
clear.
you very much.
Okay.
Thank you very much.
Yeah.
Essentially, what you're saying is 1.2, a million naira a year is not as good in terms of outcome as 83,000 naira monthly.
Yes. You
Yeah.
have
So I mean,
greater return.
absolutely. I share that view as well. I think the other question was around compounding, and you just touched on it with the high yield savings accounts. But which other vehicles help with compounding in a guaranteed way? So I know with equities, and if you have a long-term horizon, there's a compounding effect that potentially can happen there as well. But it's not guaranteed because the market isn't stable. So aside from high yield savings accounts, which other asset type helps you achieve guaranteed compounding effects such that the slide you showed, I think it's 3 slides or 2 slides up, where you showed a growth trajectory of about 15% over a long horizon. Hello?
Okay. Yeah. Thanks.
Yeah. So
Thank you
what,
very
what
much.
asset classes help you achieve that kind of growth trajectory beyond high yield savings accounts?
Yeah. Okay. So two things apart from the high yield savings. So you have the um, money market mutual fund. So so what most people also do is, there's I know for Afrinvest Pluto's fund, maybe Stanbic to maybe on a quarterly basis, they pay what they call distribution. Some will call it dividend, some will call it distributions. So if you get your distribution, um, like on the Optimus platform, I don't know how Stanbic does theirs. They auto if you elect to auto invest. I think Parrywise too may have it. If you decide to auto invest, when they pay the distribution, they use it to buy additional units for you. So it means your investment will grow faster because you are not taking money out. So you have that money market. Even for shares, that is volatile. But the way you can compound for shares is when you get the dividend. Like what I do for my kids is they are in their bank account. When they pay the dividend at the end of a period, I move it back into their investment account, stock account. So that will also increase. It means you are buying additional units of what they already have. So it's always just between the savings bond. The way I always advise people to compound on savings bond is get an account that is not your operational account. When they pay on a quarterly basis for savings bond. They pay on a quarterly basis. So after that, when you receive your coupon, you can add it to the following month's investment. So it will increase what you would save. So those are like the fixed income treasury bills is the tenor for treasury bills. It means that you are waiting for 1 year. But how you can also compound that, if when I invest in treasury bills, I decide not to take my upfront interest. So that upfront interest also earns a return. So if the treasury bills are supposed to, if it's 20%, I'm supposed to get 200,000 on the 1 million. This 200,000, if I reinvest it, 20% of 200,000, 10% is 20,000. So that's 40,000. So at the end of the day, I may be having 1,240,000 instead of just 1,200,000 at the end of 1 year. So you are reinvesting the interest. Sorry, let me admit, just have been waiting. So you are reinvesting the interest for the investment. So that is really that is very important. Yeah. So thanks.
Thank you very much, Doc. Sorry. Uh, so sorry. Thank you very much, Doc. Um, the money market mutual funds you spoke about, recall it's not a fixed income. It's fixed income, but the interest is not fixed. It varies over time,
Yes.
unlike a treasury
Yeah.
bill. Yeah. So what I hear you say is, isn't that varied? I think I'm not too clear on what you're saying about that, to be honest.
No, what on the mutual fund, because they pay distribution.
Yes.
So if average return on a daily basis is about 19% now,
Yes.
and it may drop to 15, but that 19% at the end of the quarter, they pay you the interest for that 3 months. That interest, you use it to buy additional units of mutual fund. It will increase faster than just taking out that distribution. So you also compound it. But one of the best way, if you have good platforms that are regulated and you are comfortable with, monthly compounding will give you higher rates than quarterly
Yes.
compounding. But quarterly compounding will give you more return than annual compounding. But if you feel you are comfortable with the platform, if like what I spoke about the treasury bills, 1 year you just put in you reinvest your income, you see that that's additional 40,000. It can get bigger as you progress. So I think that will work. Thank you so much.
Thank you.
Okay, so I'll go to the next person. J is sell. Let's say, sorry
Hello,
for
sir.
but
Good evening. Sorry
yeah. Good
for
evening.
yeah, I joined this session late. I didn't know on time, but quick question. I'm new to investments and I just started hearing about Free Invest, although I've been saving with Piggy Vest, but I want to move beyond saving. But what I need clarity on is it that when we buy these things, we don't have to do anything extra. You just leave the money and maybe after a year you come back and it has grown, or I just want to get clarity around how it works. Thank you.
Okay, so I'm sure you would. I will also send the recording, but not to take too much time so that I can be able to take more questions. So for Piggyverse, what you'd have been doing more is savings. We call it high yield savings. Savings. What you will do if you're comfortable with Afro Invest is you also now be able to diversify your fixed income into treasury bills. You'll be able to diversify it into treasury bills. The minimum is 100,000 naira to invest in it. CPs, if you have the capacity to, the minimum is 5 million. Sometimes they come out, you have one of 1 million. So you can also look at that. Then FGN savings bond, which is 2 years, 3 years. Interest rate is about 16% and 17% for last month. So you would see that you are diversifying. So you are not just doing high yield investments. You are not just doing high yield investments. So that's what the other platforms will do for you. Then if you feel you now want to take a bit of more risk, when we talked about our balanced portfolio, for just to show you this chart, which you would also see if you listen later on, you need to know what kind of investor are you. So if you are you want to do equities, you can use, this is for Nigerian equities. You buy these equities depending on where you belong, so you can use this. We'll post, I'll try to update maybe before end of this week our recommended list. We'll post stocks that you want to buy. So when you say coming at the end of the year, 1 year for some of these investment for stocks is short. You need to have longer horizon. So, but you are building it. So if it's 1,000 naira every month, you want to be putting in stocks, keep putting it in some of those stocks that have fundamentals. Market is a bit, when we say market is soft, it means market is not moving as expected, going up as expected, but it doesn't remain like that all the time. It will definitely improve as the economy also improves. So you can invest in it, you get your dividend, and you begin to grow your investments and monitor it. I don't know if I've answered you. So it's not, don't put more money up, you just put money in Dangote Cement in January and you just stop, and by December you're trying to see whether it has gone up or down. You have to either periodically, Dangote Cement I buy in January, buy in February, buy in March, April. So you are building it. Don't do one off. But if you are just starting and you have monies that you say, okay, I'm just starting investment, 5 million. I want to put 1 million in stocks. Then you just buy across those stocks because you are just starting. Then you now start building it. Is it 10K? Is it 20K, 30K over time? Don't do one off. Yeah. Thanks. I hope that is clear.
Yes, it's clear, sir. Like we just have to consistently keep putting in something, isn't it? But then we don't have to do
Yes.
anything else. It's just to keep putting money there. You don't have to do anything.
You need to also monitor. So what we said is average of it every 6 months, monitor your investments. You need to monitor it. Don't just put money and just go and sleep, and just monitor. Let's assume CBN withdraws GTB license. Now, GT Bank has been a bank that has been so consistent, but they now withdraw their license. You have bought their stock. It means that that bank will not be performing well as expected again. There's no point holding it. You cut your loss, or you cut your losses and you move on. There's no point holding. That's why there's a need to review. And we would also be sending periodically if there's a major news or we're reviewing, taking out 1 or 2 stocks. We'll state the reason why we think that just move on, cut your losses, and you move on if it's not. But overall, the purpose is that you if you are consistent about it, it will lead to a growth. The companies don't stay where they are. Last 2 years have been so aggressive. And this year, for those that are new, may now be wondering how you've been hearing that stocks have been going up. There's always a break at times. We look Vanguard 500, we did 5-year analysis. 2022, it was down, but an average of 18% every year on a dollar investment is a good deal. So that's the way you look at it. Build it gradually and assign a certain percentage to them. Please try and watch. I'm going to share the recording by tomorrow or Tuesday. You can also watch it. Yeah, thank you. Adebayo, I'll still come back to the chat.
Good evening,
Yeah.
Doctor.
Yeah, good evening.
So I have 2 questions, and one of them is that how can we calculate dollar investments given that conversion rate drops? For example, when you invest in a dollar investment and conversion rate is about 1.6, and by the end of your investment, maybe due to the economy, things change and the rate drops to maybe 1.450 or 1.5. How can that affect your investment, sir?
Okay, thank you. So,
Can you hear me?
if the rate, using your example, thank you. I got your question. You when you were investing, you invested at 1.6, and rate is now 1.5. You know, when you're going to calculate return, it's always, I'm not trying to go technical here, but you don't just do 1.5 over 1.6 to know what you are losing. It's always the reciprocal we use in calculating it. Yes, so it means that I will do, sorry, I don't plan to go very technical, but since you have asked to just show you 0.000, or to make it easier, if you let me see if I can just use, it's easier to just use this a spreadsheet. Sorry, just a minute. Sorry, I'm using 2 screens, so sorry, I'm trying to move it. Can you see my screen now? So
Yes.
yeah, sorry, I like to be practical. So you have 1.5. Let me increase the font. So I say to calculate it, we always look at reciprocal, because to 1 divided by this. So this is you bought at this price and the current price, right?
Yes, sir.
So if I'm going to look at the rate, this divided by this minus 1. Please, for those, just forget all the jargons calculation I'm doing. It's just for us to get. So the actual appreciation, this is an appreciation of the Naira, is by 6.7%. So if you have invested, you converted 1 million Naira, 1, 2, 3, right? You converted 1 million Naira at, you got these dollars. So, and you invested it. And later on, let's assume that gained on this investment. If you have gained more, let's say you gain 10%, 1.1, your money is now this. You now want to convert it back to Naira. So to know how much you have actually gained, is you invested 1 million. So you still see that sometimes you can, the gain here is about 3%, but you have not also lost money, because the return you got, if you see here, I assume that you are you are getting 10% on your dollar investment. At the end of the day, changing it back to naira, you still made 3.1%. But what I will want you to note is that, see, the naira might have appreciated now. The reality about Nigeria, when we talk about currency, is that we are not producing enough to sustain it at this level. Part of what, there was something I posted, if you are joined by that time, that the Dangote refinery, by supplying and the supply of products in naira, really helped the dollar to appreciate, because most of the marketers did not need to buy dollars. Importation of fuel accounts for about 30 to 40% of our FX demand. So that reduced significantly. Also, with the fear of the way he has been crashing price, so no businessman wanted to lose money. So that led to the appreciation. Now that NMPC that is competing with, they have decided to cancel the crude oil swap, not to go into the technicalities. Now he wants the marketers to be paying him in dollars, because he gets crude in dollars and doesn't want to get exposed. There will be pressure on the dollar, except they come back and solve that. So because you are investing for long term, you are not bothered. If you have that long term perspective, there's no need for you to be bothered about the current rate. If tomorrow it gets to 1.4, if like the way we are doing our end of month stuff, convert your naira, whether it's 10,000 naira that you want to convert and buy stocks, you convert it at that rate, it will even out. And when the stock market now gains, you gain 20%, gain 30%. The naira cannot continue to appreciate as long as we don't produce enough. Yeah, I hope that is good. Hello, I hope that is explanatory enough. So the next person, so after this, I'll go back to the questions on the chat, then come back later. So, Mr.
Can I ask questions, sir? Sorry.
Okay, just go ahead quickly.
My second question is that at what point do we need to add insurance to our investments?
Okay, very good question. So you need to, at the beginning, you can decide depending on the level where you are. So when we talk about insurance, excuse me, there are different types of insurance. You can look at if it's to protect your property, excuse me. Yeah, excuse me. Yeah, so if it's to protect if it's the life insurance, health insurance, property insurance, you can add that on the side. It doesn't stop it. Yeah, once you start having properties, you can't buy a car of 10 million and say you don't have insurance. So all those things are really very critical, that we also need to have. It's not I won't say it's a form of investment, but it's to protect you. Yeah, thanks. So let me go to the questions, then I'll come back on the chat. Does Optimus okay, I've answered that. Thank you for the session. Please, you made mention of Zenith paying dividend every month and in a year. No. Thank God that you asked. No, so that you don't. They pay twice in a year. There's what we call interim dividend. Interim is they pay it before year end, and final dividend. So you will get one, they pay maybe July, August. Then they pay one maybe around April. That's the final. April, May. Those that pay quarterly, that in the US, there are companies that pay monthly. There are companies that pay quarterly in the US. But in Nigeria, it's mostly twice. Seplat pays quarterly. That's the only company that I know that pays quarterly in Nigeria, Seplat. And they pay in dollars if you or convert it to Naira at the prevailing rate. Okay, I think I've answered this. How does one calculate dollar fund investment given the conversion rates from trades? I think I've answered that. Please, can we get the slides for the webinar? So the recording will be shared. So it's as good as you also have the slides. Mr. Odewo Peter, at what point do you sell any stock? What are the pointers? So to sell a stock, so first of all, it's I'll try to be brief about it. I know we'll still discuss stock. To sell a stock, you have to know why you have bought that stock. So if it's long term, you are not selling. It's like when I talk about my long term. So I have different type of portfolios. I have long-term portfolio. I have the short-term portfolio that I trade. I take opportunity. The long-term, I hardly sell. But maybe I wake up tomorrow. When I may sell is maybe I wake up tomorrow and see GTB at 100, and maybe I bought it at 20 naira. I may sell a part of it. It's long-term with the hope that from 100, maybe it will come back to 80. Sometimes it may not come back, and sometimes, most times, it comes back. So if it's stock with strong fundamentals, you don't need to sell because you are building wealth. You are not speculating. You are not trying to do in and out. If it's stocks, sometimes like I was posting last week, livestock. When it got to average cost, maybe when we started introducing it, maybe on the platform, maybe at 6 naira or maybe 5 naira plus, and it went to 8 naira. I asked people to sell part of it because it's a short-term stock. It's long-term, but it's I call it speculative stock because they are like growth stock. They are not fundamental. They don't have as much fundamental, and they are just growing. So, and now it went to 10 naira plus. I think that day that I said people should take what 10 naira, maybe 60, and now it came to last week. It came to 762. So I bought at 762. It's gone to 8 something. So if you touch this 10 naira, I may sell part of it again. But I don't want us to. We are not traders here, and that's why I say it's not for everyone. For the fundamental stocks, keep them. There's no need to sell. If you have a bit of capital, you have a mark for the speculative stock. Once you are getting 30%, 40%, take some, I'm putting this sum in capital, some profits. So your total value of stock may be, imagine you have invested 50,000 in a stock and you now see that is 100,000. The first thing I always advise people is first take your 50,000 naira out, and leave your return. Assuming it's moved by 50,000 to 80,000, you can sell 50%. But I don't want to build the mindset of traders. We are investors. But the opportunities, we did something on Dangote cement. We spotted it when it started moving. We bought at 380, almost 400, and it went to 502 within 1 week. I think we notified ourselves and we sold. Now it stayed at 432 for a while. It doesn't happen all the time. If we see those opportunities, we bring it up. So we call it our long term has come faster than expected. So let me see. So I would love to ask, what is the essence of transgenerational wealth? Okay, very good question. So what transgenerational wealth is, you are handing over something to your kids. For, I believe, as a Christian, they said you should be able to, your children should be able to inherit things from you. So yes, for some people might not have started with anything, but if you now have the capacity, imagine you're handing over 10 million worth of stock, maybe when your kids start working, and you're handing it over to them, or you're handing over 100 million naira worth of stock, they are not going to start from scratch, like maybe you started or we started. So, yeah, something that would outlive you, transgenerational. You can even now put it in a trust. That I know one of my former colleagues that their grandfather said anybody that wants to go to school, whether it's master's, whether it's PhD, the trust pays for it. But that trust, you must go to school. You cannot take the money and go and spend. They will pay, whether it's foreign school, whether it's Nigerian school, that trust will pay. So you can set that. So it's good to build wealth that outlives you. So even if it does not outlive you, when you retire, you don't want to be depending on your children. So you are building something that will be giving you steady return, steady income. There was a platform, someone said, bought Stapler then, maybe at maybe 300 naira when it was listed, and sold Stapler to send the kids to school abroad. The Stapler is almost at almost 7,000 plus. Know someone that invested in Aradel 10 million early last year, and by end of the year had 87 millions. They don't come all the time, right? But once you are close to something, it means that when the opportunity will come, you also benefit from it. I know someone that retired from this industry, invested close to about 300 million in Aradel and got like 3 point something billion and retired from the markets, one of our colleagues. So sometimes it comes like that, but the focus is you are building transgeneration, you are building wealth that will outlive you. Let me see this. If my responses are not clear, you can re-ask your questions. If I plan to be investing 100K for 10 stock every month for 10 years, by the time the shares are all-time high, can it affect my returns? Yeah, so one principle that is even a study that has also been carried out, that if you are able to take advantage of, when we say best days in the market, best days means they are red days. So if you target to buy only on red days, there's no way you will not optimize your position. So like this month now that our goal is monthly. If you want to do quarterly, is fine. Yearly is fine. Those shares are at lower rates. We will buy them. They will not continue to remain there. Microsoft, most of us will pay for subscription next year. Their business model is still intact. So we will buy it even if it has gone down. Metal that has gone to almost 800 is now 600. We will buy for the. So when you now look at it in the next 10 years, it will definitely, they might have even done stock split. Maybe it gets to about 1,000. They do another 20 for one, it comes to 200. They start trading like that. Microsoft have done more than 10 stock splits. You may see it at $200 per share, but those that bought it 10 years ago, maybe even if it's one unit they bought, they may have close to about 20 units now because they keep doing stock splits over once it gets to over 1,000 so that people can afford to buy it. In the US, most companies don't do fractional shares like we have in Nigeria. So when they do stock split for those shares, people now have access to buy them. That's what is happening to NVIDIA. It's a $200 per share stock. It may not get there now, but it definitely over time it will also get there. So please, is there any investment now that can give 25% interest after discount? Yes, there are a few. You need to, depending on the amount you have to invest. If it's commercial paper, there may be some mid-rated commercial papers that can give you a net of 25%, minimum 5 million. And you can go for the auction. I think auction is around 23% now for 1 year. So maybe wait, if it increase at the last auction, if it doesn't go down at the next auction, maybe, or you bid at a discount rate that maybe is close to 22%, so you can get a yield of 25%. But please, if with inflation rates that has been rebased, you know what will happen is whether we all agree with the inflation rates, as as long as everybody, all investors, foreign, domestic investors are dealing with that inflation rate, that is what everybody will be working with. Inflation is now 24.8%, right? So it means that we expect MPR is at 27.5%. At the next MPC, once they begin to cut rates, we expect rates to also begin to drop. So you need to note that. Okay, on the spreadsheet, because I'm hoping that I'll be able to have time to look at, develop something. Can I still invest in treasury because I can't find it? If you can only find it between 10 and 2 p.m. daily, because it's the secondary market and it's not available all the time. High invest, I think, is available 24 hours on high invest. You can also look at that. Which is better outcome monthly? Okay, I think I've answered that from Adewumi. Dennis, please, how can you know the best time to buy a particular stock at the best rate? As you did, there's no, see, what, like I mentioned I was doing is I set something aside on a monthly basis. So if I'm buying GT Bank today at almost 60 naira, I keep buying. Maybe next month I find it at 55, I still buy. And suddenly I wake up and I see GT Bank at 30 naira. Let's assume I'm allocating 10,000 monthly for them. I can decide that month and say maybe I want to do 50,000 because I'm seeing those prices at a very cheap rate. And after that month, maybe I may not buy for the next 2-3 months because I front loaded what I'm supposed to buy for them on a monthly basis because I'm seeing it at a ridiculous rate. So there's no, we are for long term. So on a monthly basis, we'll take position. When we see them at ridiculous prices, you can increase your allocation for that month, and maybe the next month you don't buy at all. What percentage of one's salary do you advise should be invested for a great return? No, I think this is relative. This from Mr. Shobayo. Is relative, but it's always advised if you are just, maybe you start with 20, 30%, but it's good to first, where you start from when we talk about investment is you need to have your budget. You need to know how much you're able to save. Then you begin to increase it. You don't start big. If you have not been doing something before and you say you just want to start with 50%, that will be tough. So you take it from 20, you are so used to it, you take a 30. When you are so used to something, if you have not saved or invested in a month, because that consistency is what matters, you will not be yourself. But there can truly be months that you can, there can truly be months that you can, you may not actually invest. And you have been doing, let's say, for 6 months, and something comes up based on needs, and that month you allow it to pass because you have been doing it, but consciously you know that you have missed something that month, and the following month you make it up, or you just continue from where you are stopped and you just keep building. So that is the habit I want us to buy. I bought Zenith last year at 34, but I need to buy. Now it's trading at 45 this year. At what price level do you think I can accumulate more in? I think this stock has almost gotten to 50 before. Buy small, there's still a potential it can go down, right? You can accumulate. When we say accumulate, it means you are not buying aggressively. You are just buying a part. So that, let's assume it doesn't come down again. You are already in. So you can look at that. Yes, the recording will be provided latest by Tuesday. How do we get our CSS statement? And you can send an email to your stockbroker. It will be forwarded to you. I invested in Mansa, that's AXA Mansa, maybe their mutual fund, but it's not doing well. I use FBN Quest for my Nigerian stock currently. Can I still download Afro Investor and use both? Yes, you can still download Afro Investor and use. You can have your stock. Then if you think that later on you are comfortable with Afro Invest, you can move your shares from FBN Quest to Afro Invest and consolidate after a while that you are comfortable with it. Yeah. What platform do we receive news updates on policies that affect stocks and investment decision? So what I try to do, there's a podcast I do monthly for the church, like tomorrow on inflation rates. would also be coming out. These are also to keep you abreast of what is happening. You can look at nairametrics if you have the time. So if there are specific news that we know will influence part of us, which I try to post it. I don't want, sometimes it can get very busy, and that's why I try to be deliberate not to be posting too much. So people don't just open their app and see 100 charts. They may not even read, they will just go and miss valid information. So, but when we see some, I think I did one on the Dangote refinery, subject to also time, sometimes can get very busy. So look at that. It's almost getting to 9 that I promise. So I'm trying to wrap up. Please, what's the relationship between Transcorp Power and they are all almost owned by the same company. One is into hotel, one is into power, and one Transcorp is like the parent company that also invests in and that invest in the, so considering Transcorp and Transcorp Power, they are subsidiaries. So what happens is if the two of them, hotel and power, they are doing well, if they own 60%, if the dividend goes to Transcorp, Transcorp now pays, Transcorp is almost like a holding company now. So you're able to benefit from whatever is happening to hotel and Transcorp Power will feed into the parent company. How do we hedge against inflation and volatile FX markets? So it's by talking about it, investment in, we can invest in REITs, invest in gold, through the US market platform, there are ETFs that invest in gold. So you can invest in gold and also hedge. You can invest in REITs, even on the Nigerian stock market to hedge. Then invest in dollars, in FX. So when we say invest, as long as you are not doing one-off, you are not speculating, whatever levels you find it, when dollar was at 1.5, you buy. That's that month. If it's monthly, you are doing. If it moves to 1.6, buy. Let's assume you suddenly see it at maybe 1.9 that it moves within 1.2 weeks. You may want to hold on and see what level it will settle, right? So you can look at that. Do all fund managers, yes, management fee and performance, no. Yes, they charge management fee. Standard is regulatory by SEC. All mutual funds are regulated by SEC, and some of them have clauses of performance. If they hit above, let's assume the performance for equities, most times it's always equities that is volatile. Maybe they hit a target of maybe 30% is minimum threshold. If they make 50%, they may put it there that they will share maybe 20 or 30% out of what they make, and the rest goes to the portfolio, the unit holders. Please, what are the advantages of a trust fund over will? Okay, there will be no much time. I think this person also asked this. A trust it helps you to manage your investment even while you are alive. It's already kicked, so they help you put it together based on the condition you give to the trustees. That's based on that is used to administer that trust. Sometimes it also reduces tax. You are not trying to transfer like a will. You have to now begin to. You are ready. It kicks in after the death of the person. A will kicks in after the death, but a trust you can, while you're alive, it's still very active. I think I'm wrapping up. I'm mindful of our time. How can I invest in real estate without fully involved? You can look at REITs, UPDC, I think Sky Home REITs. Look at their return, have a certain percentage exposure to it. If you have those people that are credible, that are doing off plan, you have the mind to be part of the off plan, you do that, you join them. If they land opportunity, you can work with a lawyer. These opportunities, they cost much, but be happy to work with people that even if you have to pay 1 or 2% of the cost, invest in. What do I think about Jai's Bank? I've not looked at their results in recent times, so I won't be able to. To invest in REITs, most times you send an email to your stockbroker. So I believe that I believe that I've been able to answer questions, but if we still have questions, please let us also be free to drop them on the platform. I would apologize at times. I may be very busy 1 day, 2 days, maybe I've not responded, but I try because I'm really passionate about this. I will try as much as possible to ensure that I respond. Those that are also very knowledgeable, have the experience, I appreciate all the effort you are putting in. Also, when I see that someone has responded, someone has tried to help out, or some I see it's basic, and I'm hoping that yes, with the way we have built ourselves in the community, someone for sure will definitely help out. So please let us just continue to help out. Thank you that for allowing me to share part of your evening with you. I know work starts tomorrow, so I won't want to take too much of our time, but I believe that we have been able to learn one or two things. What I also appreciate is that I would like to for us to drop our feedback on the platform, just for those that maybe may still be skeptical about what do I tend to benefit from this. Let's drop it to encourage them on the, not on this platform, on the WhatsApp platform, just to encourage them. It's not for me doing this wholeheartedly, but I want more people to be able to benefit from this. The group is about 1,300 people on that group, and I think we have about less than 100 joined today. So please, let's just share the word. Let's encourage people. It's free. We are not charging. People that have reached out, we've had discussions with them. We've not collected money from anybody. So just is for the fulfillment is that we are learning and you can also build people up. So thank you so much and have a blessed week. Thank you. Yeah, thank you. Thank you.